So, Binance can show a lot of money on their balance sheet. The problem is that all of these crypto exchanges, all of them without exception, are very happy to show you how much money they have in their books and how much money they have in their crypto wallets, but they never tell you how much they owe people. They show their gross assets, they never show what their liabilities are. So,
did anyone predict FTX fall when everyone was bullish about the exchange? Even if professional analysts at some famous financial institutions didn't say anything, one analyst predicted the FTX collapse months ago. Who is he, and what more he has to say about the other crypto exchanges and the future of the crypto market? Before you think about buying or selling your crypto, listen to what this analyst has to say because it can change everything. Not to make a move now and regret it later, you should know what's coming from an analyst who had predicted FTX collapse. Welcome back to the Metaverse Economy, a channel where you get all important updates about the crypto world. If you want to stay on the surface during these uncertain times, this channel has the videos for you that matter the most. Let's get started. James Block, an author at Dirty Bubble Media, saw what other analysts missed: inflated assets, hidden leverage, and blunt frauds at FTX. He came to know that FTX and Celsius had a link that went back 1 year. In other words, both were doing business together, which was kept secret from the crypto world. James Block said that he researched and found out that Celsius was buying millions of its selling tokens on FTX, which no one could trace. FTX allowed it to buy those tokens and manipulate the price, while Celsius benefited by pushing its token price. In his article, James Block wrote about the odd thing he noticed that was going on between Celsius and FTX. Later, after Celsius' meltdown, he knew FTX would fall too, because both of them had the same strategy. FTX was doing exactly the same as Celsius did, so a collapse was inevitable. However, no one else noticed that.
Well, the two companies had very, very close relationship going back well over a year. So Celsius was engaged in a very similar scheme as FTX and Alameda were with their token, the Cell token. And so FTX was like the main exchange that Cell token traded on throughout 2021. And during that period, my research and as well as sworn statements from Vermont securities regulators and others have shown that Celsius was buying tens of millions of these tokens on FTX's exchange in order to manipulate the price of that token. The token was then marked to market on their balance sheet, and then they used that to show that they were solvent and raise funds. Celsius successfully completed a $750 million equity raise in 2021 with Westcap and the LOT CDPQ, which is the Montreal Pension Fund, as the main investors in that. So they basically were, in the Celsius case, they were able to use these tokens as a way to prop up their balance sheet and show that they were making money. And apparently these big institutional investors fell for it.
But how did James Block know FTX would fall too? Well, he researched and found some secrets that were kept away from the investors and the crypto market. Listen to what he said about the shady business going on between FTX and Celsius.
When Celsius froze withdrawals back in June, they basically prevented their customers from taking their money out anymore. They had a very large amount of debt, both to FTX as well as to a number of these decentralized finance platforms. And these were secured by a significant amount of customer collateral. So what they did was they actually liquidated large amounts of their customers' collateral using FTX as the intermediary, and then in the process paid back over $700 million in loans, both to FTX or from FTX and from these decentralized protocols. So there are a couple of different places where the relationship between these companies was very close.
He quoted that during June, when Celsius froze investors' assets, it had debts to major crypto platforms, including FTX. Customers' assets were used as collateral to back these debts. Therefore, the assets had to be frozen. Now, with such a close relationship, it was obvious for James Block to deduce that what happened to Celsius could also seep into FTX. He knew it could take a different form, but FTX fall was inevitable. Here's a little reminder to like the video if you were loving it, and if you don't want to miss videos about prudent investment and the crypto market, subscribe to our channel. Let's continue now. So after knowing most of the crypto exchanges cannot be trusted, investors run toward Binance. But is Binance a trustworthy crypto exchange? Well, James Block mentioned the same strategy that every other collapsed crypto asset managing exchange did. And the scary part is, Binance is following the same strategy. Listen to what James Block said about Binance.
So the only difference being that they have their own blockchain associated with that token. So it's something closer to like a layer 1 token. Again, I don't believe any of these things have any value. If you look at what the Binance Smart Chain, which is their own little blockchain, is used for, it's exclusively used for incredibly small, scammy tokens that make the stuff on Ethereum look like it's blue chip. So what the real value of that thing is, I don't think it's a whole lot, if anything. Binance does claim to have billions of dollars in stable coins that are their own stable coin, the Binance Dollar. And That's actually issued by a separate company called Paxos, which is based in the U.S. I don't think they've ever been audited, but they probably are more trustworthy than maybe like Tether is. Whether or not they have the dollars or not, nobody knows for certain. I think it's probable that they do. So, Binance can show a lot of money on their balance sheet. The problem is that all of these crypto exchanges, all of them without exception, are very happy to show you how much money they have in their books and how much money they have in their crypto wallets, but they never tell you how much they owe people. They show their gross assets. They never show what their liabilities are. So Binance has billions and billions and billions of dollars. That's very true. But we don't know how much money they owe their customers and other parties. So I think that Binance probably is not in a great financial position. My guess is that that what he did to FTX was, I think, probably more of a move of desperation than one of strength. That would be my guess. And then in addition to everything else, regardless of their financial position, they face very, very serious regulatory problems, both in the U.S. and in other countries for a variety of things involving everything from money laundering and tax evasion, avoiding the securities regulations, and et cetera, et cetera. So I think there's a reason why they don't have a known headquarters anywhere in the world, and they constantly are on the move.
He made it clear that Binance is no different than all other crypto exchanges, with the only exception being that it has an associated blockchain. However, this blockchain doesn't give it the legitimacy that today's investors want. Binance has its own token and blockchain. However, James Block said this blockchain is only good for making the newly launched tokens as blue chips. In other words, the Binance blockchain can give an honest look to the tokens, irrespective of whether they are or not. He said that Binance might have billions over billions of dollars in its books and crypto wallets, but it doesn't tell how much it owes people and other crypto platforms. That's the same as Celsius and FTX did. Investors don't know whether Binance has more assets than liabilities, or the case is otherwise. He also pointed out why Binance has no headquarters in the world. That's because it is also in shady business like tax evasion and money laundering. Therefore, it's always on the run. He said that personally, these tokens mean nothing because they don't hold any value. They are scammy tokens which these crypto exchanges and platforms declare valuable. But interestingly, these exchanges define how much value they would be by manipulating their prices. This begs the question, whether this collapse virus spread to other crypto exchanges, projects, and cryptocurrencies. When James Block was asked what he thinks about the risk after the FTX collapse, he said 2 words, very high. He said that most investors don't want to believe that the crypto market has started to decline, and the force bringing continuity is moving away. However, he said that the future seems quite harsh if we see what has happened so far. Already, Celsius saw a meltdown while FTX also collapsed and filed for bankruptcy. BlockFi, another crypto firm, has filed for bankruptcy after FTX collapsed. The digital currency group can also face a disaster as its regulators failed to regulate, and according to CNBC, it has a $2 billion debt. James Block also said that various hedge funds have collapsed, while various crypto platforms declined, locking clients' money on the platforms. Seeing this trend, it's obvious that the shockwaves would also reach other crypto exchanges and assets. However, the biggest threat is yet to be revealed. James Block quoted that the list of FTX's 50 major creditors has been kept confidential to hide their names. Nobody knows how many crypto exchanges are their creditors. In other words, we can guess that if crypto exchanges are on that list, it would also see a steep decline.
Very high. A lot of people got burned here, and a lot of people who didn't expect to get burned got burned here. And we're only just starting to see the consequences of that. So, for example, BlockFi is gone now, which they had been supposedly bailed out by FTX. And we're going to talk about Digital Currency Group in a bit. They got burned. A lot of hedge funds and crypto funds got burned and have money locked on these platforms. Unfortunately, they allowed FTX to make their 50 largest creditor sheet confidential at this time, so we actually don't know who has money locked on there yet. A number of funds have admitted they have large sums on there. So there's a lot of people with immediate first-order exposure to this thing. Who they had been borrowing all these billions of dollars from is a good question as well. Obviously, a lot of it was customer assets, but we don't know who else maybe had lent FTX money, maybe even on a semi-secured basis. So that's the second problem. So yeah, there's definitely a huge risk of contagion, and it looks like that's already playing out. And there's a lot of companies that are in serious trouble here. The other thing to consider.
So what does James Block predict up next? After he predicted that FTX would fall, which it did later on, what other crypto platforms can he think can sink? Let's listen to what he says.
2 weeks ago, I wouldn't have seen that coming. I didn't expect FTX to collapse as quickly as it did. I knew that they were in trouble, but I didn't expect that they were as bad as they were. So, yeah, I have no clue, man. All I know is that everyone is at risk. There is no exception here. Just because of the collateral damage, even the companies that are not directly exposed are going to have serious problems. The fact that a major exchange, Gemini, is now completely discredited because of their relationship with Genesis means that they're going to face serious problems. And all the reputational damage is going to have tremendous consequences. And it's just starting to play out.
He said that he didn't expect FTX to collapse so early. He saw that FTX would collapse, but didn't know the situation was worse than he thought. Also, James Block said that he knew Digital Currency Group would go down. However, he didn't expect the fall to be so soon. Therefore, he said, all the crypto platforms are under threat now. He cannot name one or two because the sword is hanging on all of them. Some would be directly affected, while some would bear limited losses. Some would see a decline, while others can totally vanish and collapse as well. Do you agree with James Block and all his opinions about the crypto exchanges and the future of cryptocurrencies? Comment your opinions in the comment section right below. Do you want to watch more videos like this one? If yes, then please like and share the video and subscribe to the Metaverse Economy for more videos about the crypto market and investment insights. Until the next video, stay tuned.